Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Thanks for tuning in with us if you're just tuning in. And thanks for having been with us if you've been here all morning. We've got a lot to talk about. These markets have got a lot of inputs in them. So let's kind of take a look at the markets, because ultimately those markets are going to be your money, right? I mean, this is what this is the brass tacks of things are, right? December corn, how about that? 3 1/4 cents higher at 5.29. We're a penny off the highs. That's not bad. Well, that's a good Monday morning start, isn't it? How about March, up 3 cents, 5.37 1/4. That's 3/4 of a penny off the highs as well. So we're off to a good start in the corn. What about soybeans? What's happening over in the soybean market? It's 5 1/4 cents higher in that no beans at 12.23 even. That's 3/4 of a penny off the highs there. So another decent showing. Jan's up 4 3/4 at 12.31. Chicago wheat. What do we have happening there? That's mixed, isn't it? Dees is off a half, 7.33 1/2 is last, while we've got March up a half at 7.47 even. So a little something there for everybody. How about hard red wheat in Kansas City? Kansas City, here we come. Pretty much up across the board, except for you go out to the deferreds. They start to weaken a bit with SEP off a half. But in the front, December is up 1 3/4 cents, 7.45 1/2, which is definitely right in the middle of the day's trading range. March is up a penny and 3/4 as well at 7.52 1/2. How about spring wheat in Minneapolis? Let's get to that one. Mixed, I'll say, I guess. 2 3/4 cents lower in December at 9.66 even. Again, in the middle of the day's trading range. Nothing really to shout about there. 2 3/4 cents lower in that March contract at 9.54 1/2. And then last but not least has been the wild one. 60 points lower in the Dees cotton contract at 106.73, but we have a high of 109.69 and a low of 105.41. So it's been all over the place there. That's a pretty big move. All right. That gives me the opportunity to bring in Todd Horowitz from Bubba Trading. Todd's in Las Vegas, gambling all away his money. Todd, what do you think about everything, those prices on a Monday morning? What strikes you?
I think it's a sleepy Monday, Scott. The equities made a dramatic turnaround from being much lower overnight. Grains have been relatively solid the entire time, and I think we're in these range-bound moves right now. I think it looks to me we want to go higher, and I think it'll take some catalyst to really start to get the buyers to show back up again. But we certainly held the bottom ends of these ranges, and certainly are trying to push higher, with the one exception of soybeans. But again, they're higher, and they've been higher the last couple of days. So look, I think we're going to be in good shape. I think things are looking good from that point, and they better look good because the input costs keep going higher, and we need to get more money and more profit for our farmers because, of course, the cost of putting that stuff in the ground is getting much higher.
Are the harvest lows in? What do you think?
I think so. I do think there's a real good chance that the lows are in. Not that we won't have some down days here and some wild trade, but overall, I think the lows of the markets are in, and I think that the end of the rest of the fourth quarter, early first quarter, I think we look for some higher prices and maybe substantially higher, but a lot depends on a lot of these things that are going on outside the world of farming.
Well, and as we've spoken about before, you look at these prices, I mean, considering what we've been through, you've got Dees corn, 5.25-ish, and you've got beans with a 12 in front of it. You got 2 wheat contracts with a 7 and one with a 9 in front of it. So, I mean, that's not bad going, considering what we've been through. That's still pretty good. And I know that these yields have been good, too. Go ahead.
How about cotton as well? I mean, cotton, it wasn't that long ago. Cotton was 50 cents. Now it's over $1. It got to $1.16. So, I think the commodity world looks really solid in here in general. And I think that we're going to see some better prices. Again, there's obviously always the wild card of some of the nonsense that can happen. But overall, I think we see higher prices. Energy can be a problem, especially because we don't produce it anymore. But I think overall, I'm in pretty good shape. I'm pretty excited about what can happen. But of course, we do have some issues that we have given up total control, so we cannot control some of the inputs, which we used to have some control over.
Yeah, you're preaching the choir. Okay, stay right there. We're going to go away, pay some bills. We'll come back and talk with Todd about livestock after these messages. Welcome back to Market Day Report. I'm Scott Schulte, and that is a great cheap segue into the live cattle markets. that we haven't touched on in about a half hour. So why don't we take a quick look at what's happening over there in that live cattle market? We've got the December contract 27 cents lower at 130.70, while Feb is 15 cents lower at 135.20. And we can tell by those changes on the day that it's a pretty quiet cattle market. All right, let's take a look at feeders. What do we have in store for us when it comes to the feeder market? We've got November off $1.27 at 160.15, and we've got January off $1.25 at 160.27. All right, then now let's take a look at what's happening in that lean hog market. Lean hogs were higher on the day, but they're quietly higher on the day. 35 cents higher in December at 78.62. February is up 20 cents at 81.52. And then we can get back to our guest analyst, Todd Horowitz from Bubba Trading. Todd's in Vegas. Todd, what do you think about the livestock? Anything there tickle your fancy?
I think it looks really good, Scott. Look, my biggest concern, I think they've made lows that they're going to make. However, we have a big problem in the supply chain area. And this is, look, the things that are going on, the unwillingness of people to work, the inability to get people to take the jobs that are available is having a big effect on the supply chain, which will eventually affect these prices if we can't get people to go to work, because the farmers can produce it, but we got to be able to deliver it. And that's my biggest concern in today's world.
And you know what, again, obviously it's the talk of the town. If you look at the weekend news shows, it was all over the place, and supply chain this, supply chain that. And here's what I say. Look, at some point in time, they're going to be right, and it's going to take care of itself. Some are talking the spring. I think it's going to be a lot longer than that, all right? But when they finally do sort out those supply chains, do you and I believe that this inflation that's been caused by the supply chain problem, do you think all of a sudden McDonald's is going to say, you know what, we're going to knock 25 cents off that burger? You think any of these prices are going to come back down in these restaurants?
No.
No, I'm kidding me, right? So the supply chain has driven up prices to a place where it's going to stay, and then once they take care of the supply chain issue, prices are going to stay there. So it's not going to come back down. So we're going to continue to pay these prices and these penalties even after supply chains get sorted. What do you think?
Well, it's called taxation without representation.
Right. Yeah.
Well, I think about it. And Starbucks never came down in their coffee prices, and they've gone to the moon, even though coffee goes back and forth. Look, the bottom line is very simple. Okay. They've got these prices up. They're forced to now pay much, much higher wages. You can't go to a fast food restaurant without a sign saying we'll pay $17 an hour, which is twice the minimum wage right now, with benefits. So those prices are never coming down. Inflation is here. And my concern is either hyperinflation or stagflation. Both are very real possibilities at this time, which could be the overall fly in the ointment of my take of these markets in general.
All right. Well, we'll leave on that note. That's pretty scary. But that's Todd Bubba Horowitz from Bubba Trading. Thanks, Todd. He's in Vegas. We're in Nashville. I'm going to hand it back over to Janet.